Welcome to LCD's European loan market video overview, detailing leveraged finance trends and activity during August and July 2013. I'm Suchit Gupta, a member of S&P Capital IQ's Leverage Commentary and Data Team, a unit of McGraw-Hill Financial that is not affiliated with S&P Ratings. For the next few minutes, I'll walk you through a review of recent loan and high-yield bond market trends in Europe before winding up with themes to watch for in September and early October 2013. Before we start, please know you can follow LCD on Twitter, Facebook, and can join the over 11,000 contacts in LCD's Leveraged Loan Group on LinkedIn, as well as leveragedloan.com and highyieldbond.com, free websites promoting the loan and high-yield bond asset classes. On it, you'll find recent market stats, news and analysis, high-yield and leveraged finance job postings, and online primers that explain key market terms. The links to our website and to all LCD's social channels are in the info section on our YouTube channel. You can also download the slides for this video at slideshare.net. The European leveraged finance market, both primary and secondary, enjoyed a summer of confidence. Loan issuance was 10.4 billion euros for July and August 2013, while high-yield bond issuance was 8.2 billion euros for the same period. Secondary markets were up, loan markets were up to finish August at 99.83, while high-yield bond markets were up 253 bips to finish August at 102.45. According to JP Morgan High Yield Research, estimated inflows into European high yield funds were almost 1.6 billion euros for July and August, versus outflows of 2.4 billion in June. Net inflows till the end of August are estimated to be 1.3 billion euros. The S&P European Leveraged Loan Index, the LE, was up for both July and August 2013, with August returns at 1.45%, the highest read so far this year. 3 new CLOs priced in early August, including 3i's, Haymarket Financials, and GSO Blackstone. This adds to July's tally of 3 from Ares, CSAM, and ICG, and brings the year-to-date new issuance from CLOs at 4.13 billion euros. Default rates were markedly lower both on an issuer count and on a principal amount basis. Focusing on the secondary loan market, this chart details the average price of LCD's European loan flow name composite, a measure of the 12 largest, most liquid loans consisting of 10 issuers since 2002. Secondary loan prices rose 72 bips in July and a further 9 bips in August to finish the month at 99.83. Since the beginning of the year 2013, the average loan bib has risen 218 bips. This next chart details the average price of LCD's European high-yield flow name composite, a measure of the 12 most liquid high-yield issued since the beginning of the year 2010. The high-yield market was up 70 bips in July and a further 183 bips in August to finish at 102.45. The average high-yield bid, however, is down 156 bips since the beginning of the year 2013. Risk is definitely back on for now for secondary market investors, as the fall in prices combined with high-yield fund inflows as well as new CLO creation have got buyers back in the market. This chart details the monthly return of the LE, a broad measure of the European loan market that LCD calculates. All returns are ex-currency unless otherwise stated. With a pop in the secondary markets, the European loan market had the highest monthly return this year of 1.45% for August versus 0.39% in July. This brings the year-to-date return to 4.7% versus 6.34% for the same period last year. Now we turn from the secondary to the primary. This graph details new issue volume for both leveraged loans and high-yield bonds. High-yield issuance was 7.8 billion euros in July, while loan issuance was 9.7 billion euros, making July's 17.5 billion the second highest monthly tally after May's 18.1 billion euros. It was the busiest month of the year so far for loans, with 9.7 billion euros issued from 25 deals. The market took its traditional summer break in August, with loan issuance at just 0.6 billion euros and high-yield bond issuance at 0.3 billion euros. However, not everyone took a break. Aside from the numerous deals to wrap and allocate, 9 in total, of which 5 were cross-border, 3 other borrowers, Minimax, Wood Mackenzie, and BSN Medical, took advantage of the ongoing liquidity to launch and wrap opportunistic refinancing deals. Moreover, September should get off to a decent start with a healthy pipeline of potential launches building, including Skrill, OGF, Chesapeake, and Campbell Soup. The default rate by principal amount was down to 4.2% at the end of August from 4.5% at the end of July and 5.3% at the end of the first half 2013. The default rate by issuer count fell to 6.1% at the end of August from 6.5% at the end of July and 6.6% at the end of the first half 2013. Themes to watch for going forward. There's a strong forward calendar for both loans and high-yield bonds, as issuers try to lock in favorable rates and terms. Risk is back on, as seen by lower default rates and better manufacturing data. However, any exogenous event, like another war in the Middle East, could set it back again. The CLO calendar is still strong, though it doesn't and won't make up the shortfall from what will disappear from the market when a number of CLOs go past the reinvestment period. 25 billion euros in 2013 or so, and then another further 16 billion euros in 2014, taking 97% of legacy CLOs offline. This is according to JP Morgan research. What does that do for Europe? Beyond a certain size/quantum of debt, issuers have to look towards the U.S. market for liquidity and best execution, be that either through loans or through bonds. That brings us to the end of our overview. I hope you found it informative. We'll update the analysis each month and plan to have analysis of other specific European market segments going forward. Check out LCD's YouTube page for other video analysis of the leveraged finance market, including U.S. loan market wrap-ups. The link to this page is in the description for this video. For more information on LCD news or research in Europe, you can contact Anna Cheney. You can email her by clicking on the link in the info box. Thanks very much. We'll see you soon.